Namaste, good morning. We start with the last part of section 36. Okay. One transfer to deduction for transfer to special reserve account. This is available for this housing projects, meaning basically whose main source of business is housing finance, agricultural finance, and infrastructure finance. It's also part of 36. Available for entities who are in housing finance, finance for infrastructure projects, and agricultural finance. The special reserve account is not available for distribution. The special, so when you transfer it to special reserve account, you cannot give dividend out of that account. It should be used for the purpose of business, something like plowing back of profits, deposits. Okay, here you need not deposit, but keep it in a special reserve account. Maximum deduction will be 20% of profits, 20% of actual amount transferred, 200% of paid up capital plus free reserves minus amount already available in reserve. Am I clear? Okay, right. To your practical material to work out a question. To your practical material to work out a question. Page number 25, question number 27. Page number 25, question number 27. A housing finance company which qualifies for 3617 provides you the following: paid up capital, general reserve, opening balance of reserve account. The company seeks your advice on the maximum amount that can be transferred to reserve account in order to claim full deduction. Please continue. Somehow it got deleted. The profit for the year is 2,500 lakhs. The profit for the year is 2,500 lakhs. The maximum amount of deduction under section 36(1)(7) will be actual 20% of profits, which will be 2,500 into 20%, 2,500 into 20%, 500 lakhs, 500 lakhs. Okay. 200% of capital plus general reserve, 200% of capital plus general reserve, nothing but 400 plus 500 into 2, okay, 1,800 minus amount already available in reserve account, minus amount already available in a reserve account, which comes to 1,400. So another 400. Okay, right. So this is about transfer to reserves. There are two case laws in the process that I missed to write. We will write it here. One is for section 35 AD, specified business. Another is for section 35D, preliminary expenses. Okay. First, section 35 AD related case laws, CBROS. They constructed a hotel, 3-star hotel. So 2-star above category hotel qualifies. So they started constructing the hotel, then applied for 35 AD benefit to the relevant body, okay, to make it qualify as a specified business. So application was made, for example, in 2024 after the construction has commenced. Approval was granted in 2025. The question in front of the law is the department contended only from 2025 your expenditure, that is post grant of approval only you will be allowed. Okay, for which the court said no. The deduction is with the intention of investment. Has the assessee invested? Yes. The section itself is saying that past period expenditure can be accumulated and claimed. So these are sufficient proof to say that the assessee is eligible for exemption even for the profits or even for the income or expenditure made, capital expenditure made before the commencement, before the grant of application. Okay, if you have space in 35 AD, write down. Otherwise, write it down here. Bronze Industries Limited. Assessee made an application for claiming 35 AD after commencement of construction of hotel. Approval was granted in the subsequent year. The question in front of law was whether past period, whether expenditure before grant of approval can be claimed. The question in front of law is whether expenditure before grant of approval can be claimed. Held by High Court that investment is the primary criteria. Approval is an formality. Hence, assessee can claim deduction in the first year of operation for the expenditure incurred before grant of approval. May I? May I? Online friends, may I? Yeah, sure, 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 sure. Take your time, take your time. Next is on preliminary expenses. securities premium will not form part of cost of capital. Okay, capital employed will only be share capital, reserves, and free and long-term borrowings. Okay, securities premium, which should be kept deposited in a separate account, will not form part of cost of capital employed. Berger Paints. That is, we find 5% of capital employed. For that, securities premium should not be taken. That's the whole point. May I? Okay. So, to recollect whatever case laws seen so far in PGBP, Chennai Properties, K & Co, Gujarat State Fertilizers, Saurashtra Cements, compensation linked to an asset will not be considered as cost of, will not be considered as income, but cost of asset should be adjusted with the cost of the asset. Rama Multitech, where your share issue expenses can be adjusted against interest on application money. Income oriented. Depreciation. Sivakami and Co. Beneficial ownership. ICDS, lessor can claim the benefit of depreciation by allowing it on lease. He is using the asset. Federal Bank, BSES, both are for computers and accessories, printer and scanner, you can claim 40%. Whereas for EPA, BX and mobile phone, you can only claim 15% depreciation. Okay. Apart from that, these two are the case laws which we have so far seen. Okay, because today is we are going to see a lot of flood of case laws. Okay, next I move on to section 37. Section 37. General deduction. Section 37. General deduction. Section 30. Expenses with relation to building. 31. Plant, machinery and furniture. 32. Depreciation, which consists of normal, additional, proportionate, unabsorbed depreciation for electricity companies. 34 is not there. 35. Scientific research, specified business expenditure, social welfare deduction, and amortization. 7. Amortization. 36 is other deductions, but there is a list. 37 general deductions, there is no list. 37 is general deduction, but there is no list. Section 37 has some condition. If we fulfill these conditions, deduction will be allowed. It should not be mentioned in section 30 to 36. When will it tap the doors of 37 is if I have not mentioned it in 30 to 36. It is not a capital expenditure. It is not a personal expenditure incurred during the previous year, incurred for the purpose of business or profession. It is allowed. Repeating. It is not there in section 30 to 36. It is not a capital expenditure. It is not a personal expenditure. It is incurred during the previous year. this is the condition where we understand prior period items are not allowed under income tax law. In income tax law, they say, in accountancy, we say after the year is over, I found out an expenditure which belongs to that particular year. So in this year, I debit or credit it and show it as a separate line item in my financial statements. Income tax law says, revise your return. Revise your return. Why do you want to? Anyhow, after accounts closure only you are going to file. So at that time, if you have not claim it under the income tax statement, otherwise revise your return. No question of prior. It should be incurred during the previous year. This condition tells us that prior period expenditure are not allowed and then incurred for the purpose of business or profession. Okay. The 5 conditions. Expenditure is not mentioned in section 30 to 36. It is not of capital nature. It is not of personal nature. It is incurred during the previous year. From this condition, we infer prior period items are not allowed under income tax law. Is this clear? Is this clear, friends? Okay. So let's take a small expenditure like traveling. Anywhere from 30 to 36, it is not mentioned. Suppose if the traveling expenditure is for purchase of a machinery, inspection of an asset, it's of capital nature, will not be allowed. Suppose the travel is for personal purposes, will not be allowed. Suppose the travel is for an expansion to a new business, preliminary expenses. Any expenses at the time of incorporation and expansion is preliminary expenses. Like that, if you now recollect, if you now look into your P&L account, 75% of the expenditure will come in 37 only. If we look our P&L account, purchases is a major expenditure for a trading manufacturing sector, which does not have 30 to 36, which is not mentioned. Any manufacturing expenses is not mentioned. Salaries is not mentioned in 30 to 36. Any printing, stationery, traveling expenses are not mentioned in 30 to 36. So 75% of our items will come and fall in 37 only. That's why this section gets more important. Discussion on penalty. Penalty means payment made for violating law or any standards. It includes domestic law as well as foreign law. Okay. Penalty includes any payment which the receiver is not allowed to receive okay. Penalty includes any payment which I am making. It is not for me, but the receiver is not supposed to receive it. Okay. Every profession has ethical standards. Okay. Trust me, ICAI also has. Okay. I think it comes for some 15-20 marks, so you would have read it. Okay. Ethics are part of any profession. Okay. Let me start like this. A doctor is prohibited from receiving freebie. He is not supposed to receive any freebie. He is not supposed to receive freebies. Samples. It is the pharmaceutical company's duty to test everything and then come to give it to doctor. You cannot give it to doctor asking him to test. Or any other gift. Indian Council for Medical Professional prohibits doctor from receiving any freebie because you will unfairly favor the company. If you receive something, you will be liable, obligated to favor them, which is not the good practice. A circular was issued, a notification was issued by CBDT that since the doctor is prohibited from receiving any expenses pharma company makes on these things will be disallowed. The receiver, it is pharma company, sir, it is my marketing expenditure. Had I given to a dealer, you would have accepted it. Yes. Had I given to customers, you would have accepted it. Yes. If I give to doctor who is my customer, why are you not accepting? Because the doctor is not supposed to receive. So notification came that this is not allowed. Confederation of Indian Pharmaceutical Association challenged the notification in the High Court, saying that, boss, this is unfair. If the receiver is not supposed to receive, you penalize him. Asking me not to provide is not the right thing. Because for me, sales matters. For me, say, if I am not giving, if somebody else is giving. So, High Court said, ethics are ethics. If he is not supposed to receive, you are not supposed to provide. One of the companies in that CIA is Confederation of Indian Pharmaceutical Association. One of the companies, the Chennai-based Apex Laboratories, went to the Supreme Court saying that, boss, this is wrong. It is a genuine expenditure for me. Supreme Court also said, if the receiver is not supposed to receive, you are not supposed to pay. And then, before the Supreme Court judgment itself, we brought it under the income tax law. Any expenditure which the receiver is prohibited to receive according to ethical standards will not be allowed as deduction. Am I clear to you? Okay. This is also a sort of penalty. Penalty does not include payment violation of law. Okay. Not wearing helmet, violation of law, penalty. Okay. Not meeting the standards, penalty. Okay. Any breach of law is penalty. Remember, breach of law is penalty. Breach of contract is not penalty, it is compensation. Every contract will have penalty clause. It is not penalty of imposed by the government. It is the contractual term, breach of contract. Okay. So this is how the entire story went. Okay. So first, the notification of CBDT in 2012. Notification of CBDT in 2012. Notification of CBDT in 2012. Freebies provided by pharma companies to medical practitioners is not allowed as deduction, as the receiver is prohibited from receiving the same by the Indian Council of Medical Ethics and Code. Am I clear to you? Okay, right, friends, please listen. So I am prohibited. Now the circular has a very interesting part. I am prohibited from giving. I gave. Is it allowed as deduction for me? No. Is it an income for you, for the medical practitioner? Any benefit or perquisite arising in the course of carrying on business or profession is an income. Section 28. So this is not allowed as an expenditure for me, but the same circular said for the receiver it is an income. Okay, that's where income tax law the revenue thinking is. Okay, I am taxing that twice. One, normally my expenditure is your income. You are not allowing me the expenditure, but you are taxing you as the income. Okay, however, where it is received, it is taxable in the hands of the medical practitioner. Challenged the circular in High Court, but the High Court held in favor of revenue. Okay. Am I clear? Okay, friends. One more circular which was recently released by the CBDT, that is in 2025. Any expenditure settled incurred to settle proceedings initiated in relation to contravention of default under the following note shall not be deemed to have been incurred for the purpose of business. SEBI, Securities Contract Act, Depository Competition Act, anything of this nature, my dear friends, any penalty. Okay, even the normal discussion says expenditure which is for any purpose which is an offense or which is prohibited by law, benefit or any compounding of offense prevailing in India or outside India, any type of penalty is not allowed as deduction. Am I clear? Okay. Okay. Any political contribution, any political contribution or advertisement in the publication of political parties, not allowed. That's the C. Can claim the benefit of section 80 GGB and 80 GGC if he is under full tax voucher. This is 37 to B. Am I clear? These are expressly there in the law. Section 37 has these things. You cannot claim penalty, you cannot claim political contributions, including advertisement in the souvenirs of political parties and discussion on, and you cannot claim CSR expenditure. You cannot claim CSR expenditure. This is there expressly in section 37. Then comes the circulars issued by CBDT. Then comes the circulars issued by CBDT. We are going to cover three circulars, my dear friends. We are going to cover three. Keyman insurance policy. Keyman insurance policy. Expenditure on build, operate, transfer. First, I'll speak about Keyman insurance policy, friends. Premium is allowed as deduction if you insure the key people, CEO, CFO, COO, like that. The premium you are paying will be allowed as deduction. It is also considered as group insurance. Group insurance does not mean all the employees, even the key people, key man insurance, the premium is very high. Okay, it will be allowed as deduction. When the policy matures, it will be treated as income. When the policy matures, it will be treated as income. Where the policy is assigned to the respective individuals. Suppose if the company is not receiving the policy, I give it to my CEO, CFO, or whoever it is. The maturity is taxable as salary, profit in lieu of salary. The maturity is taxable as salary or other sources in the hands of the receiver. In the hands of the receiver. Am I clear to you? Am I clear to you? Okay. Friends. So this is scheme and insurance policy. As of now, the maturity is never a question. Only if the premium paid is allowed. Now the answer is allowed. Please understand. Now, Larsen and Toubro, many companies take highway projects, express highway, or any highway projects which they are taking. What is the agreement between government and them? You build the road. You operate it for 20 years. The toll charges is your income. After 20 years, transfer. BOT. Build, operate, transfer. Whose asset is this road? Whose asset is that road? Does Larsen and Toubro own that road? No. Government owns it. They only give you operational right. Ownership right they are not giving you. Build, operate, and then transfer it back to us. So, can Larsen and Toubro claim depreciation? The answer is no, because it is not owned by them. But what about the expenditure? Go back to the same terminology, amortized. Amortized over the period of operation. So I laid it for 500 crores and I'm ready to operate it for 20 years. Okay, some 25 crores over 20 years. you can claim it as deduction. Am I clear to you? Okay. The cost of construction of a road is a capital expenditure to be amortized. The whole cost can be amortized over the period of operational right. Okay. To be claimed as deduction only in the year in which censor certificate is obtained. Where the film is abandoned, then the year of dropping the project. Please read. So suppose if it takes 2 years, 3 years to make a movie, you have to keep on accumulating the cost till you release the movie or obtain the censor certificate. That year only you can. Until then, it is stock in work in progress. But if you decide to drop off the movie in that year, you can claim whatever is the expenditure. Am I clear to you? Okay. These are all the three relevant circulars. The other two I have not found questions. Scheme and insurance, there are questions. Now I am moving into case laws pertaining to section 37. Okay. Mainly case law revolve around these two things. Is it a capital expenditure? Is it a penalty? Okay. Okay. I'll tell you something. This is for your understanding. From our theory notebook notes, I'm going to cut and paste it in this concept book, because there I have covered it briefly only. Okay. Here I'm only writing the citation, so that if you see the citation, you will understand the case law. Okay. First, let me confine myself to capital expenditure related case law. Oriental ceramics. Okay. If you see bigger glow sign boards, you want the remote. You feel cold, you okay? Manageable. If you see glow sign boards, is it allowed as a revenue expenditure or capital? Because it's a huge glow sign board. But the court said it takes a small stone to put the entire structure down, or the weather conditions can put the entire structure down. So they said glow sign boards not treated, treated as revenue. Okay. You just listen. That is more than enough for me. Anyhow, I'm going to paste it. Glow sign board is considered as revenue expenditure. The next is Priya Village Roadshow. Okay, Priya Village Roadshow, nothing but PVR Theatre. Their full expansion is Priya Village Roadshow. They tried a new type of speaker. They tried a new style of sound system. Okay, but due to non-feasibility, it did not work out. They dropped that expenditure. They dropped that project, but they have incurred some expenditure. The question is it revenue or capital? This is a very interesting scenario, which was also quoted in the recent case law. Is it incurred for an existing business? Yes. Has it resulted in an asset creation? No. So it is allowed. Two conditions. If it is for a new business, it will not be allowed. Okay. Feasibility study conducted which did not create an asset. Feasibility study conducted for an existing business which did not result in a creation of an asset shall be treated as revenue expenditure. Shall be treated as revenue expenditure. Just listen. Priya Village Roadshow. Okay. Feasibility expenses for an existing business without creating asset is a revenue, is allowed as revenue expenditure. And this is also quoted in a recent case law by the court. Okay. Okay. Adadin technology. Expenses incurred by the associate towards development of software for which due to advertisement technology had to be abandoned can it be claimed as revenue expenditure? Yes, associate has incurred expenditure in these 2 years to develop a software, but due to change in technology, it had to abandon the product. In effect, it had lost money spent on this product. Accordingly, the High Court held that it is not having any enduring benefit. So it can be claimed as, it should be an existing business. It is abandoned without creating an asset. Okay. Am I clear? Okay. ITC hotel. ITC hotel. What is this particular expenditure? Expenditure on issue of debentures, convertible, non-convertible, redeemable, convertible into shares, whatever it is. Expenditure on issue of debenture. Can I claim it as deduction? Preliminary expenses. Uh, can you just turn 2 pages and see what is preliminary expenses? The law has given the list. We have written 35D in the amortization category. We have written first the preliminary expenses. What are all preliminary expenses? Feasibility study, project report study, payment to expert, foreign and MOAOA. And what is the first one you read? Or okay, continue. That is the word I want. Share issue expenditure. Is debenture issue spoken? No. The court asked, when you have a specific provision, sir, I have never spoken amortization in income tax law, sir. It takes the general meaning. Then you are right, amortize. You have very clearly said what should be amortized in section 35. You have very clearly said. In that you have not mentioned debenture. So, expenses on issue of debentures will be treated as revenue, okay, and claimed in the year of incurrence. All these things, don't worry, I'll take care. You are just understanding, I know that. Okay. Debenture issue expenditures are allowed as deduction. In the year of incurrence, you can claim it. Okay. Are you following online, friends? Lija, I'm going to ask you something, Lija. Have you been to Bangalore, Lija? Okay. I'm sorry for the next few statements which I am going to make, Lija. Okay. Right. Russia released something like this. If you drive at 100-kilometer speed for 145 days continuously, you will still be in Russia. That is our land space. For which we answered, leave that 100 kilometers. Even if you drive for 145 days, you will still be in Bangalore. Okay. So, yeah. So, what happens is, okay, Infosys office is here. And here is the bus terminus. A person getting down here has to cross the road to reach Infosys office, and it took 45 minutes. Yeah, it took. So what Infosys did is they erected traffic signal in front of their office. And do you think that they can operate the traffic signal? I cannot operate. That belongs to the government. For the safety and security of my employees. I am not erecting the traffic signal because I want to serve the public at large. That I will erect it at another place. Why am I erecting it in front of my office? Is for the safety and security of my employees, and the traffic signal is not my asset. It belongs to the government. Ledger, can I claim it as revenue expenditure? Staff welfare expenditure. That's what they say. Yes? Why? Is it not a capital expenditure? Okay. 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 Right. I take that that explanation. Yeah. Thank you, Ledger. It is a capital expenditure, but it is not, the asset is not owned by you, and it is incurred for the purpose of employees welfare. Okay, any expenses which indirectly benefits the employees shall be treated as business expenditure even if the asset is not owned by assessee. So this case law opened up a lot of things. It indirect. My company runs a school where the children of the employees are studying. I purchased a bus for the school and gave, not for my employees' children need to travel in that bus, etc. So I provided it, allowed as deduction. Okay, Infosys Limited case laws gave us lot of ideas about any expenditure which indirectly benefits the employees. The asset is not owned by me. You can claim it as deduction. Yes, yes. Yeah, yeah. It's indirectly for employees. Mightly is bad debts allowed? Is bad debts allowed? Section 36, it is allowed. Section 36, it is allowed. What is bad debt? I sold goods and the person is not paying money, so it is bad debt. You accept with me? The money which I am due to receive, I am not receiving. Okay? Okay? Mightly, I gave rental deposit 5 months, 10 months advance as rental deposit. The owner is not giving back when I vacated. Is it allowed? Why? Why? It is to do with business. Is it allowed? What's Neha? It is in the nature of bad debts only, so it should be allowed. Okay. But our court took a difference that I also thought it is allowed. But when you sold goods, you recorded it as income. Later writing off is just a adjustment factor, nullifying effect. When you paid rental deposit, it is a capital expenditure. You took it to balance sheet. Write off will not be allowed as deduction. Will not be allowed as deduction. I clear? Okay. Writing off and capital expenditure. Okay. Which is there in the balance sheet. Deposits. So these things are not debtors. So more like current assets write off, it can be claimed. Long-term assets write-off, it cannot be claimed as a deduction because originally you have not recorded it as income. So this is the recent case law which said that rental deposit will not be allowed as deduction. Cap scan. I am a scan center. I am a scan center. And then many doctors send me their patients. So I paid referral fee to the doctor because they have referred. Is it allowed? Can it be allowed? Why? Why? Why strong no? Why are you so angry with doctors? Yeah, you're answering me. Okay. Yeah, go ahead. Your answer is right. Doctors should not do that. Payment prohibited. They said, I have deducted tax, sir. 194J, I have properly deducted tax. Just because you have deducted tax, it doesn't ratify a penalty. Okay, I take both the answer. Referral fee not allowed. Okay, referral fee not allowed. Okay, it cannot be claimed as deduction. Similarly, millennia developers. Friends, I am allowed to construct 3 floors. I constructed a 4th floor without approval. Later, they asked me to pay regularization fee. What I paid is popularly known as regularization fee. Not allowed. Regularization fee is in the nature of penalty. You are not paying approval charges, which can be allowed. Okay. Regularization fee is in the nature of penalty, not allowed. Okay. Leelavati and others. I'm running a cinema theater where a controversial film was not allowed to screen. Was not allowed to screen. Not allowed, not by the censor board or by the government. The local people are saying that you should not screen that movie. So I appointed Gunda and I paid policemen to protection charges and claimed it as expenditure. Not allowed. The court said it is the duty of the government to give you protection. It is not a prohibited film. Your area people are not allowing to do that. Okay. You paying gundas or police personnel is illegal in nature. Okay. So not allowed. Okay. No, it is not the bouncers or security guards. Friends, CAP scan, configuration of Indian pharmaceutical industry and Apex Laboratories. Okay. Oriental Ceramics, ITC, convertible debentures. PVR and Adadin Technologies, not creating an asset. Okay. Never read this case law. Okay. Mahila Anand is for foregoing security deposit. Okay. It could not be treated as a revenue expenditure merely because it is a, okay. It is evident that the character is of capital nature. I wrote Leelavati, it is Neelavati. Neelavati and others. Normal security expenditure are allowed. However, illegal or other things, millennia developers. Okay. Infosys technology is for the erection of, okay. Okay, these are the other, it is not falling under penalty or other thing. It is for other case laws. Okay, Infosys technologies. This is so for these things. The other case laws which you need to understand. The apart from but majority or capital expenditure or revenue expenditure, or is it penalty? The other case laws which you all have to understand, okay, or like this. First, XJ forging. XJ forging. The director's son, the son of the director, got an admission in Harvard Business School. The company said, we will sponsor the educational expenses. Post qualification, you should work with us for 5 years. Is it allowed as deduction? Yeah, it is allowed as, okay. What if he don't come? At that time, I have nothing to disallow, remember. The High Court asked back a question. Good. Is it your regular scheme that you sponsor your employees' children and one of the beneficiary is director's son? No. Then I will not allow. Remember the wording, because immediately there will be a question. Where it is a regular scheme and director's son is one of the beneficiary, then allowed. Where director's son is the only or first beneficiary. Sir, today I start the scheme, sir. I am not ready to believe. Okay. Okay. Where director's son is the only or first beneficiary, it is not allowed. If it is a regular scheme, no problem. You take it. You take the expenditure. Okay. Yes, 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 yes. It is only director's son. If it is any other employee, it will be allowed. Okay. And it should be a scheme which is there in your, okay, this national cooperative, okay, is nothing but that which says, if I am making an expenditure out of an exempt income, can I claim it? Yes. Is the expenditure for the purpose of business? That's what should be seen. If the expenditure, what is the source of making that expenditure? Share capital income is, share capital receipt is not an income. Does that mean expenditure out of share capital money received is not an expenditure? No. Okay, right? Source can be any modes. Spending, if it is fulfilling other conditions, it is allowed. Okay. Now, there is something known as broken period interest. You all have studied this probably in your accountancy. There is a chapter called investment accounts. X interest, come interest. So interest dates are 36 and 31/12. I purchased the security on 1/9. Broken period interest. I will get the 6 months interest on 31/12. Accountancy says pre-purchase, pre-acquisition period interest should be adjusted with the cost. Pre-adjustment period interest should be adjusted with the cost. Okay, but in our case, okay, the interest of the broken period cannot be treated as capital expenditure and has to be taken as revenue expenditure only. Remember, provided they are held as stock in trade. So our law says if it is a permanent asset, if it is a long-term investment, then take the broken period interest, capitalize it. If it is a general repeatedly performing, take the broken period interest as revenue expenditure. Am I clear to you? Okay. I'll come to Wipro Finance alone little later because it is related to some other provision. Wrongly fitted it here. Okay, it is related to some other provision. I'll come to Wipro Finance later. So these are our major case laws in section 37. Minimum 2 case laws will be tested. Minimum 2 case laws will be tested from section 37. From section 37. I want you to quickly go through this. Take 5 minutes, quickly go through this. I will paste it in our concept. No. Shall we? Okay. Now for some more interesting things in 37 itself. Okay. Expenses on rights issue is not allowed. Expenses on rights issue is not allowed. Why? Because it increases the capital base of the company. So it is a capital expenditure. Expenses on rights issue is never allowed, whereas expenses on bonus issue is allowed. Why? It does not increase the capital base. General reserve becomes share capital. So from one form to another form only it goes. Okay. So expenditure on rights issue not allowed. Expenses on bonus issue allowed. penalty is not allowed. What is penalty? Violation of law. Interest is allowed. It is not violation of law. Late filing of GST. You pay some interest. Allowed. Delay in remittances. You pay interest. Allowed. The explanation given is interest is intra-virus. Penalty is ultra-virus. Violation of law is different from not complying with that provision for which themselves they have a specific aspect of allowing. Okay. Interest versus penalty. Interest is allowed. Penalty is not allowed. But remember, interest under income tax law not allowed. When income tax itself is not allowed, any interest under 234A, 234B, 234C will not be allowed as deduction. Okay, right? We have a separate section. When we come to that, I will again speak about this. Yeah, you can write. Yeah, this part you can write. Okay, friends. VRS compensation. Is it allowed? Is it allowed? Is it allowed? Just turn, Sneha, to 35 DD or amortization, 5 years. Allowed in 5 equal installments. Allowed in 5 equal installments. Of course, I have written that. Why I am writing it here is for some other purpose. Retrenchment compensation allowed in the year of income. That need not be amortized. That need not be amortized. Am I clear? Okay. That need not be amortized. Retrenchment. What is retrenchment compensation? VRS compensation. I opt out. Retrenchment compensation. I am dismissed. Okay. Taken out. Layoff. Okay. That is allowed. Whereas VRS compensation is allowed in 5 equivalents. Is interest on income tax allowed? Not allowed. I take a loan for paying income tax. Interest on that loan is also not allowed. Okay. Interest on loan taken for payment of income tax takes the character of interest on income tax. Okay. Whereas on the other side, interest, yes, friend, if you, yeah, sorry, sorry. I always fill the other side first. Um, Interest on loan taken for payment of dividend is allowed. Is allowed. Secret commission. Secret commission takes the character of illegal payment, bribe. Okay, so not allowed. Okay, okay. Before progressing, I want to talk about two things because these are popular adjustments, though we will again speak in TDS. Section 194C, contracts. Okay, they always have this more than 1 lakh you need to deduct. Okay, all their provision. But there is a specific provision available for GTA, Goods Transport Agency, where they provide a declaration and PAN, no TDS. If there is no TDS, no disallowance when you have not deducted. Okay, because these are popular adjustments that's going to come even before we taking up TDS. I want to be clear about section 194C. The two things which we are going to speak about is GTA and goods. Okay, or GTA and sales. For goods transport agencies, payment for, sorry, payment for goods, where the transporter provides PAN and declaration, tax is not liable to be deducted at source. Okay, right? A limited, A limited wants a process to be performed on their goods, wants some process. Okay, they placed an order with the job worker to supply them processed goods. Raw material was procured by the job worker, processed, and then provided to A Limited. This is case A. Case B, A Limited gave raw material to the job worker processed, okay, and supplied back the goods to A Limited. Which is contract, which is sales? Second one is contract. So that's the answer. And how to make it live, where raw material is supplied by the customer or any person related to the customer, then 194C is not attracted, where customer merely places order, job worker procures raw material, then 194C is not applicable. Okay. Software embedded in a hardware. You buy the computer along with Microsoft 365. And software purchased with the intention of reselling. 194J is not applicable. Exclusive purchase of software for usage. 194J applicable. Is it clear, friends? Have these things. We are again going to see it in 194J, but these are essentials for TDS. These are essentials to do some solutions in our working. Okay. Do you know the difference between 234A, B, C, D, and 234E? I pay my taxes delayed. 234B. I'm not paying my advance taxes properly. 234C. I file my return late. 234A. Disallowed. Please remember, it is disallowed. I have made a payment to Sneha on which I have deducted tax and so. That I am paying it late. 234E. Or filing it late. 234E. Are you understanding? A court has interpreted and beneficial construction. So we are taking it that this is allowed. Why? It is not your tax, you are paying it late. My income tax, I am paying it late. Disallowed. Income tax, interest on income tax are not allowed as deduction. That is my income tax. This is Neha's income tax, which I have paid it late. The penalty that the government is going to, law is going to charge is not going to be allowed. But interest is just a violation of that particular provision, intra-virus. That interest will be allowed. Okay, this came as a relief to all of us. Okay, interest under section 234E. This interest is for non-payment within time or late filing of TDS. The law has been interpreted as income tax of another person paid late. The interest will be allowed as deduction. However, the penalty will be disallowed. Am I clear? Okay. This is section 37 and all its part discussion for us. Remember, it all started with whether it is an capital expenditure, personal expenditure incurred during the previous year for the purpose of business or profession. Okay. And then went into various discussion of penalties, CSR expenditure, political party expenditure advertisement, then the three circulars, okay, issued by CBDT, then the case laws, which are basically capital and penalty related case laws. Then comes some quick clarifications which are given on the basis of allowability or non-allowability. And I related also with 194C, J and E so that we can comprehensively understand. This is about section 37. 5 marks in a 14-mark question is from section 37. As I told you, 75% of our P&L account is section 37. Okay. Am I clear to you? Right. Section 30 to 37 is expenses expressly allowed by law. But interestingly, many of us don't know, or many of us are not even understanding there is a section 38 also. Proportionate usage of assets. Okay. Proportionate usage of asset. Where an asset is used for both official and personal purposes. Required documents needs to be maintained for establishing official expenditure or business expenditure. Personal portion will be disallowed. Are you clear? Okay. A chartered accountant has a car. Can you surely tell that everything is official, personal, I mean, official purpose only? A doctor having car. So we disallow. Normally, what we do in practical world, 1/3 of the expenditure, depreciation, car, petrol, maintenance expenditure, we disallow considering. But actually, as per law, you should maintain sufficient records to prove what is the official portion of it. Okay. Okay. We enter the part 2 of the discussion, expenses expressly disallowed by law. Okay, let us enter the core disallowance first. Okay, section 40 subsection A, TDS default. TDS default. What is tax deduction at source? So we all know, we are just studying that. Okay, one person's expenditure is another person's income. One person's expenditure is another person's income. Our law ensures that the person who is expending is liable for the declaration of income of the receiver. So came this provision of tax deduction at source. Split the payment into two, a tax part and then other part. This part goes to government, that is the income tax department, in the name of the receiver. Okay, so tax deduction at source, while making the payment, deduct the tax and remit it to the government account in the name of the receiver. Tax deduction at source. So I have two responsibilities: deduct tax, remit tax. When I should deduct? At the time of credit or at the time of payment, whichever is earlier, on or before 31st March. When I have to remit? On or before the due date of filing returns, 31st October. If I don't deduct or don't remit, it is known as default. Okay. Any payment made to a resident or non-resident on which tax needs to be deducted and paid. So a default here means that I have not deducted before 31st March or not remitted before 31st October or 31st July, very rare cases. 31st July cases will not come under tax deduction, very, very rare. So majority, 90% of the cases, we can take it as 31st October. Where there is a default. What is a default? Non-deduction or non-remittance within the specified date. Okay. 30% of the expenditure will be disallowed. 100% of the expenditure if the receiver is a non-resident. Hundred percent of the expenditure if the receiver is a non-resident. This non-resident is covered in two sections. 40A covers royalty fees for technical services. Salary to non-residents is covered in separate section. Both the section has the same provision. So 100% of the payment of the expenditure if the receiver is non-resident. default rectification. Is there a means by which I can rectify the default? Where subsequently tax has been deducted and remitted. So I will allow, okay, the disallowed amount will be allowed in the year of remittance. Bhargavi, I saw you in online. Are you still there? Okay. Why is TDS, Bhargavi? Why should there be a provision of tax deduction at source? Okay. Okay. I wish that you become the finance ministry person. But from a general perspective, from the overall perspective, why TDS provision? Yeah, as our friend here was saying, to track income. The person claiming expenditure will anyhow claim because otherwise he will be paying tax for it. There is always a question whether the person declaring the income will declare it as an income or not. So only TDS. Okay. So let's come back to this example. I have paid Sneha something without deducting tax. So 30% disallowed. Next year, I want to deduct the tax so that I want to rectify the default. Now Sneha comes and tells me, boss, you know why this provision? This provision is a cross-checking mechanism by the department whether I am declaring it as income or not. Look, I have declared it as income and paid the tax. If you now again deduct, I am duly affected. Please understand the provision. Okay. The provision is a cross-checking mechanism. She was saying income, track the income. The person who is receiving the income, for that only this provision is. So when I am tracking the income and if I am not deducting 30% disallowed, fine. Next year I want to deduct. Now comes the receiver telling me, boss, don't deduct. Why you want to deduct? You know why this provision? It is a tracking provision. I have paid the tax. So don't deduct. Income tax law considers that also. Okay. Default rectification will also include where the receiver submits proof. Proof means here income tax return. Where he has specified that I have received so much from Vatsan. Okay. Where the receiver submits proof that the income on which tax was not deducted has been disclosed and the relevant tax for the same is paid. So, in that year, in the year of proof submission, I will allow. Pakka clear? Okay, friends? Okay. Remember, what is default? Two things are default. What are all they? Not remitting, not deducting before 31st March, not remitting before 31st October, or as the case may be. 30% or 100% disallowed, depending upon who is the receiver. What is default rectification? That is also two. Remitting the omitted tax, deducting and remitting is a default rectification, or where the receiver submits the proof. Boss, I have considered a proof here is income tax return of the receiver. The receiver can give only in the next year. So first year disallowance will apply. Many of practically also many people ask me, sir, my due date is 31st October. The receiver's due date is 31st July. So before October, the receiver submits proof. So can I allow it in the previous year in which? No, sir. First disallow. Law is very clear. For the mistake you have committed, you disallow. I will allow it in the year of proof submission, not in the year it pertains. You are submitting proof after 31st July only in the next year. So I can only allow it in the next year. First year disallowance is sure. Next year you can allow if proof is submitted. Is the class clear? Okay, friends? Okay, right? Let me continue with the same example for some time. Okay. She is a non-resident. She is a non-resident. What she is doing is, she is conducting an exhibition in Germany. I want to take a stall in that exhibition, for which I need to pay 10 lakhs. And I say to her, my income tax law says I need to deduct 20%. So I can only pay you 8 lakhs. She tells me, why? I am rendering my services wholly outside India. I have nothing to do in this case. I'm not selling goods. I'm not providing services in India. I'm not conducting the exhibition in India. I'm conducting an exhibition in Germany. My entire services are conducted outside India. I don't have a permanent establishment also in India. Income does not accrue or arise for me from India. Just because the payer is a resident, it doesn't mean for the receiver also. No, income does not accrue or arise to me in India. So do not deduct tax. I paid. Assessing officer disallowed 100% of my payment. Went to the court. The court said, when the receiver is not liable to pay, go back to the same thing which Archana was telling us. This is an income tracking provision. When the receiver is not supposed to declare the income in India, when the receiver is not taxable in India, why are you giving her an unnecessary burden of deducting tax and then coming and filing return to get the refund? So the law said it need not be deducted at all. What circumstance? Where the entire services are rendered outside India, where the receiver does not have a permanent establishment in India, then income does not accrue to that receiver. Hence, the payer is not liable to deduct taxes. Source. Okay, friends, under that, Maruti Suzuki Limited. where the receiver is rendering the services wholly outside India and does not have PE in India. PE stands for permanent establishment. Then income does not accrue or arise for the receiver in India. In such circumstances, tax is not liable to be deducted at source, and non-deduction will not lead to disallowance. Okay, okay. So this is a very important disallowance, both practically and theoretically. And this is how the provision works to our practical notebook. Company made the following payments to residents without deducting tax at source. What will be the tax consequence? Salary, non-compete fees, director's fees. Will your answer be different if the company has deducted the tax in April 26th and remitted in July 20th? Which section? Director sitting fees, any idea? Louder. Not C. It's not contractual. J. Okay, but very interesting. One more thing. Again, we will repeat. Okay. Threshold is 0. Right from rupee 1, it is taxable at 30%. Okay. So in the second case, they deducted in April 26 and remitted in July 26. The deduction should be before 31st March 26. Since it is not there, disallow in the financial year 25-26 and allow it in the financial year 26-20. Am I clear? Okay. During the financial year, the following expenditures were incurred by a resident individual whose turnover during preceding year is 99 lakhs. The reason they are giving is 194 are not applicable. 194, okay, I, J, A, many sections, H, everything. Applicable for all assessees except individuals and HUF whose turnover does not exceed 1 crore in the immediately preceding financial year. Okay. So, interest of 45,000 paid without deduction of tax at source. 3 lakhs paid as salary to a resident individual without deducting tax at source. Commission of 16,000 was paid without deducting tax at source. Interestingly, 192 is applicable. That is only for 194. Salary is set in 192. That is applicable for all assessees. All assessees. Okay. Am I clear? Am I clear? Okay. Other parts of section 40A only. Section 40A, equalization levy. Okay, same like TDS. Same like TDS. But the receiver is obviously non-resident. Okay, where it is not deducted or not remitted, 100% disallowance in the year of incurrence. Any income tax, provision for income tax, any income tax, provision for income tax, advance tax, interest and penalty are disallowed. Any income tax, provision for income tax, advance tax, any interest, penalties are disallowed. What is allowed? 234 years in because that is not my tax, that is the receiver's tax, so it will be allowed. Okay. Similarly, any tax on purposes paid by the employer will also be disallowed. That is the employee's tax borne by the employer. So it is disallowed. May I? 40A subsection 2, payment to relatives. Payment to relatives. Any payment to a relative should be at fair market value. Any payment to a relative should be at fair market value, where the amount paid is in excess of FMV. Such where the sum paid is in excess of fair market value. What is disallowed? The excess alone is disallowed. Such excess is disallowed. I'll explain you there how this relative as per gift provision. So these are relatives. Don't worry, they specifically use the word relative. Subsidiary company, company under the same management. Any payment in excess of fair market value, such excess alone is disallowed. Okay, any payment in excess of fair market value, such excess is disallowed. Section 40A, subsection 3. Payment in excess of rupees 10,000. On a particular day to a particular person, single person, if the payment is made in excess of rupees 10,000 otherwise than by approved modes, then what is disallowed? Whole of such payment, 11,000 paid in cash, the entire 11,000 is disallowed. The entire 11,000 is disallowed. Lija, what is otherwise than by approved modes? Payment might have காது திரும்புவேன். Only three. I'll turn your ears. Only three outside are not remembering. Remember, cross the check. Cash, barrel check, cross check. Yeah. Okay. So, if payment is made by cash, barrel check, cross check, and that payment exceeds rupees 10,000, what is disallowed is whole of such payment. Whole of such payment is disallowed. In law, there are some provisions which are known as restrictive provisions. There are some provisions which are known as prohibitive. Restrictive, you can up to that level. Prohibitive, you cannot. But there cannot be in any law two continuous sections. Okay, don't immediately say that you are very passionate about tax law, so you are saying no. Okay, look at first provision. Restrictive. I'm not saying don't pay. I'm only saying pay up to FMV. If you pay in excess of FMV, excess is disallowed. Restrictive, prohibitive, don't pay. If you pay, I will disallow the whole of the component. Whole of the component. Okay? You are prohibited from paying. Okay? Okay. That is financial year 24-25. Rent outstanding 31/3/25. You pass the entry rent account debit to outstanding rent. Let's once can forget the TDS part of it. 50,000 on 15/5/25. That is financial year 25-26. Outstanding rent to cash 50,000. What happened? Louder? What happens now? It will be allowed. Okay, it will be allowed in 24-25. That's all. No disallowance. Okay. So, write and keep it. Very successful chart accountant she'll become. Okay. We only teach like that. So, I understand what went into your mind. The year in which expenditure is recorded, there is no default. The year in which default is there, no expenditure to disallow. What can be disallowed is expenditure. In the year in which the expenditure is there, no default. It's just a provisional entry. In the year in which default is there, disallow expenditure. Where is the expenditure? Expenditure is there in the last year. No prior period items allowed under income tax law. So what to do? So we started using this as a means. So came the next section, which said, oh, then do one thing. In this year, take it as income. How to nullify an expenditure? I know there is no expenditure to disallow. So I consider it as an income. Okay. Section 40A 3A. Same. Payment in excess of rupees 10,000. Where expenditure is allowed on accrual basis. Payment is made in subsequent year and such payment violates 40A subsection. They did not again say in excess of 10,000. Such payment violates 40A3. 40A3 we know on a single day to a particular person in excess of 10,000. Okay. Then the whole of such payment shall be treated as income. Am I clear? Am I clear? Okay. Rule 6DD exceptions. Rule 6DD exceptions. Government and banks, you can pay. You can pay by any modes. Farmers, in one of the question they will write, there will be an adjustment. Purchased coffee seeds by paying 40,000 or 60,000 in cash. Allowed for farmers, fishermen, agriculturists and fishermen, it is allowed. Employees temporarily posted outside base location. That is, you are a Chennai based, this is written when this GPay and other things are not there. You are a Chennai based employee, you are temporarily asked to go on an on-site to Bihar, to UP. At that time for 90 days, less than 90 days, whatever you want to pay that employee, even the salary, can be paid in cash. on retirement death, on retirement death or resignation. Okay, up to rupees 50,000. If they want immediate money, you can pay up to rupees 50,000 in cash. Resident transport operator limit is 35,000. Resident transport operator limit is 35,000. So for them, it is not 10,000. So resident transport operator, already we saw in 194C, they will, no tax needs to be deducted. Okay. Their cash payment can go up to rupees 35,000, not 10,000. Yeah. Authorize the dealers and money changes. They are also like banks. They are also like banks. Read through. Shall I move on? Okay. So this can be made. Okay. Majority of the time it will be employees or transport operator. Otherwise, they don't test on Rule 6DD very deeply. 48.3, 48 to 48.3. Next comes 40A subsection 7. So 40 is fully of TDS default, income tax, tax on perquisite. 40A consists of payment to relatives, payment in excess of 10,000 otherwise than by approved modes, provision for gratuity, and payment to unrecognized funds. Okay, okay. We continue day after tomorrow, 6 o'clock. Sorry, day before yesterday. I should have announced it on Sunday. Completely forgot the date. Okay, that's why. And I texted very late. When are you leaving? You're leaving on Friday. Okay, accordingly. Huh? You can attend on online Sunday. That's not a problem. Okay. Right. Meet you day after tomorrow. Hopefully, by God's grace, we are winding up the theoretical discussion on Friday. Okay. All the best, friends. All the best, online friends.